This hearing is entitled Game Stopped: Who Wins and Loses When Short Sellers, Social Media, and Retail Investors Collide. Thank you very much. Let the record show that all of the witnesses answered in the affirmative. We will now begin with their oral testimonies. Mr. Tenev, you are recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, members of the committee. My name is Vlad Tenev, and I'm the Chief Executive Officer and co-founder of Robinhood. Thank you for the invitation to speak about Robinhood and the millions of people we serve. Almost 8 years ago, Baiju Bhatt and I founded Robinhood. We believed then, as we do now, that the financial system should be built to work for everyone, not just a select few. We dreamed of making investing more accessible, especially for people without a lot of money. The stock market is a powerful wealth creator, but nearly half of US households participate in it.
Mr. Staff, I would like you to use your limited time to talk directly to what happened January 28th and your involvement in it.
Certainly.
Madam Chair, the witness has the opportunity to give their own testimony.
Excuse me, you are
Use
not
your time for your questioning.
You are not recognized, Mr. Please go right ahead and speak directly to the question.
McHenry.
Mr. McHenry, yes, of course.
We created Robinhood to economically empower all Americans by opening financial markets to them. I was born in Bulgaria, a country with a financial system that was on the verge of collapse. At the age of 5, I immigrated with my family to America in search of a better life. I have benefited from all America has to offer, and Robinhood's mission to democratize finance for all has a very special significance for me. Robinhood's platform allows people from all backgrounds to invest with no account minimums and 0 commissions. Contrary to some very misleading and highly uninformed reports, we see evidence that most of our customers are investing for the long term, with features like fractional shares, dividend reinvestment, recurring investments. Our customers can start with small amounts and grow their investments in blue chip stocks and ETFs over time. We've always recognized the responsibility that comes with helping people invest. We'll continue to enhance our educational platform to help customers no matter where they are in their financial journey. Hundreds of free educational resources are available to everyone on our Learn website right now. While markets fluctuate, this tells me our business model is working for everyday Americans. The total value of our customers' assets on Robinhood exceeds the net amount of money they have deposited with us by over $35 billion. This tells me our business model is working for everyday Americans. The Robinhood community. Many people say that Robinhood has helped them to pay car loans, reduce student loan debt, meet daily bills, save for the future, and we're proud to serve them. You've invited me today to discuss the events of last month, and I welcome this opportunity. In late January, many brokerage firms saw a massive increase in trading activity in a handful of stocks. Prices were moving dramatically day to day, even hour to hour. One specific day, January 28th, proved to be a completely unprecedented event. The spike in trading activity and volatility meant that Robinhood Securities, our clearing broker, had to hold the line and post additional firm capital as collateral to support our clearinghouse deposit demands. To put it in perspective, on January 28th, our daily deposit requirement was 10 times more than on January 25th. As a result, Robinhood Securities, along with many other firms, imposed temporary trading restrictions on certain securities. We began allowing limited buys of these securities the following day, and we have since lifted the restrictions entirely. There are 2 points I want to make clear about these temporary restrictions. First, Robinhood Securities put the restrictions in place in an effort to meet increased regulatory deposit requirements, not to help hedge funds. We don't answer to hedge funds. We serve the millions of small investors who use our platform every day to invest. Second, Robinhood immediately secured additional funds. Altogether, through capital raising and other measures, we've increased our liquidity by more than $3 billion to cushion ourselves against increased collateral requirements and related market stress in the future. Despite the unprecedented market conditions in January, at the end of the day, what happened is unacceptable to us. To our customers, I'm sorry and I apologize. Please know that we are doing everything we can to make sure this won't happen again. And I want to highlight one more thing. The existing 2-day period to settle trades exposes investors and the industry to unnecessary risk. There is no reason why the greatest financial system in the world cannot settle trades in real time. I believe we can and should act now to deploy our intellectual capital and our engineering resources to move to real-time settlement. Together, we can solve this. Before I close, I want to sincerely thank the millions of customers who continue to use Robinhood to access the markets every day. We are grateful and committed to you. Members of the committee, I appreciate the opportunity to answer your questions.
Mr. Griffin, you are now recognized for 5 minutes to present your oral testimony.
Chairman Waters, Ranking Member McHenry, distinguished members of the committee, thank you for the opportunity to testify today on the recent market events. The U.S. capital markets are the envy of the world. Our nation's ability to allocate capital to its best and highest use creates jobs, drives innovation, and fuels our economy. America's retail investors play an important role in our capital markets. According to Gallup, about 55% of Americans own stock right now. Citadel Securities, as the largest market maker in the U.S. equities market, executes more trades on behalf of retail investors than any other firm. As I will discuss shortly, Citadel Securities played an important role in meeting the needs of retail investors during the week of January 24th. Before doing so, I want to be perfectly clear. We had no role in Robinhood's decision to limit trading in Gamestop or any of the other meme stocks. I first learned of Robinhood's trading restrictions only after they were publicly announced. All of us at Citadel Securities are committed to the healthy functioning of the U.S. equities markets. Now, I first participated in the financial markets as a retail investor. In the late 1980s, while attending college, I traded stocks and options from my dorm room. My passion for investing led to my founding of Citadel in 1990. Today, Citadel is one of the world's leading alternative investment managers. Our capital partners include pension plans, colleges, hospitals, foundations, and research institutions. In 2002, my partners and I founded Citadel Securities. Today, Citadel Securities is one of the world's preeminent market makers. We have been a leader in using technology to transform our markets, particularly for retail investors. Citadel Securities invests hundreds of millions of dollars each year to serve the needs of our customers. In the last week of January, the importance of this investment was on full display. During the period of frenzied retail equities trading, Citadel Securities was able to provide continuous liquidity every minute of every trading day. When others were unable or unwilling to handle the heavy volumes, Citadel Securities was there. On Wednesday, January 27th, we executed 7.4 billion shares on behalf of retail investors. To put this into perspective, on that day, Citadel Securities executed more shares for retail investors than the entire average daily volume of the entire U.S. equities market in 2019. The magnitude of the orders routed to Citadel Securities reflects the confidence of the retail brokerage community in our firm's ability to deliver in all market conditions and underscores the critical importance of our resilient and stable systems. I could not be more proud of our team at Citadel Securities. My colleagues who were committed to ensuring that the interest of America's retail investors were served during this extraordinary period. Once again, I appreciate the opportunity to appear today, and I look forward to answering your questions.
Thank you, Mr. Griffin. Mr. Plotkin, You are now recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, and members of the committee, I would like to thank you for this opportunity to share Melvin Capital's perspective on the recent trading activity in GameStop. I am the founder and chief investment officer of Melvin Capital. I am humbled by these unprecedented events. Many investors on all sides have experienced losses. I am here today to share my own personal experience and to be helpful in this conversation. I understand that part of the focus of this hearing is the decision of stock trading platforms to limit trading in GameStop. I want to make clear at the outset that Melvin Capital played absolutely no role in those trading platform decisions. In fact, Melvin closed out all of its positions in GameStop days before the platforms put those limitations in place. Like you, we learned about those limits from news reports. I also want to make clear at the outset that contrary to many reports, Melvin Capital was not bailed out in the midst of these events. Citadel proactively reached out to become a new investor, similar to the investments others make in our fund. It was an opportunity for Citadel to buy low and earn returns for its investors if and when our fund's value went up. To be sure, Melvin was managing through a difficult time, but we always had margin excess and we were not seeking a cash infusion. I'm here testifying today far removed from my background. I grew up in a middle-class family in Portland, Maine. I went to a public high school. I studied hard and got into a good college. Upon graduation, I did not have a job. Today, I'm married with 4 children, and my time is spent with my family and on Melvin Capital, which I founded 6 years ago. I named Melvin after my grandfather, who ran a convenience store. I wanted the firm to represent his values: integrity, hard work, taking care of customers and employees, and commitment to excellence. Melvin Capital manages a hedge fund. Investors such as academic institutions, medical research and other charitable foundations, pension funds, retirees, and others invest with us. We have 36 employees and hundreds of investors, and I feel a personal duty to all of them. Melvin specializes in the consumer and technology sector, including companies like GameStop, AutoZone, and Expedia. Most of our investments are long. In other words, we buy stock in companies that create jobs, grow the economy, and develop new products for consumers. We do this after extensive fundamental research, sometimes literally for years. When our research convinces us that a company will grow relative to expectations, we make a long-term investment. When our research suggests a company will not live up to expectations and its stock price is overvalued, we might short a stock. Like with our long positions, our practice is to short a stock for the long term after extensive research. We also short stocks because when the markets go down, we have a duty to protect our investors' capital. There are laws governing shorting stock, and of course, we always follow them. In addition, it's very important to understand that absolutely none of Melvin's short positions are part of any effort to artificially depress or manipulate downward the price of a stock. Nothing about our short position prevents a company from achieving its objectives. It is just Melvin's view about whether it will. Specific to GameStop, we had a research-supported view well before the recent events. In fact, we had been short GameStop since Melvin's inception 6 years earlier, because we believed and still believe that its business model, selling new and used video games in physical stores, is being overtaken by digital downloads through the internet. And that trend only accelerated in 2020 when, because of the pandemic, people were downloading video games at home. As a result, the gaming industry had its best year ever, but GameStop had significant losses. In January 2021, a group on Reddit began to make posts about Melvin's specific investments. They took information contained in our SEC filings and encouraged others to trade in the opposite direction. Many of these posts were laced with anti-Semitic slurs directed at me and others. The post said things like, "It's very clear we need a second Holocaust. The Jews can't keep getting away with this." Others sent similarly profane and racist text messages to me. In the frenzy during January, GameStop stock rose from $17 to a peak of $483. I do not think anyone would claim that the price had any relationship to the intrinsic value of the business. The unfortunate part of this episode is that ordinary investors who were convinced by a misleading frenzy to buy GameStop at $100, $200, or even $483 have now lost significant amounts. When this frenzy began, Melvin started closing out its position in GameStop at a loss. Not because our investment thesis had changed, but because something unprecedented was happening. We also reduced many other Melvin positions at significant losses, both long and short, that were the subject of similar posts. I'm personally humbled by what happened in January. Investors in Melvin suffered significant losses. It is now our job to earn it back. And while I do not think that anyone could have anticipated these events, I have learned much from them, and I'm taking steps to protect our investors from anything like this happening in the future. I look forward to answering your questions.
Thank you, Mr. Plotkin. Mr. Huffman, you are now recognized for 5 minutes to present your oral testimony.
Thank you. Madam Chairwoman, Mr. Ranking Member, honorable members of the committee, my name is Steve Huffman. I am the co-founder and CEO of Reddit, and I'm pleased to talk with you today about how Reddit works and what we have seen on our site in the past few weeks. Reddit's mission is to bring community and belonging to everyone in the world. What started in 2005 as a single community has since evolved into a vast network of many thousands of communities. They range from standard topics like news, sports, politics, to internet culture, to support. For example, our unemployment community has become a source of support for hundreds of thousands of Americans who have turned to Reddit after losing their jobs during the pandemic. Our communities are created and run by our users. Because of this, we describe Reddit as the most human place on the internet. Though we are small compared to the largest platforms, our communities provide an online home for millions of people every day. I'd like to share a bit about how content moderation on Reddit works. Reddit's moderation system starts with our content policy, the platform-wide rules which all communities must follow. Among other things, these rules prohibit hate, harassment, bullying, and illegal activity on Reddit, and they are enforced by Reddit's anti-evil team, which is composed of engineers, data scientists, and other specialists. This team also ensures the integrity of the site, and we have continuously honed our methods to stay ahead of bad actors to protect Reddit from manipulation, spam, and other threats. This team searched high and low for the specific comment mentioned in the previous testimony, or anything like it. The closest we could find was a single comment that received no votes and was deleted within 5 minutes. Such speech is not tolerated on Reddit, and we will of course investigate any further claims of this nature. Centralized moderation is common, but Reddit additionally uses a governance structure akin to a federal democracy, where the aforementioned policies and teams represent the federal government and the communities themselves represent states. All communities, or subreddits, are created by users that we call moderators. They set the community's rules, which may be as strict as they like as long as they are not in conflict with the platform-wide policies, and they have a variety of tools of enforcing these rules independently. Moderators are not paid employees, but rather users who are passionate about their communities. They have the context and judgment to make decisions no algorithm could. The members of each community contribute both the content itself and the ranking of it by voting up or down on any post or comment. Unlike other platforms where submission has a built-in audience through the author's follower count, every piece of content on Reddit, no matter how famous the author, starts at 0 and has to earn its visibility. Through their votes, the community itself enforces not just the explicit rules of their community, but also the unwritten rules that define their culture. This layered approach has helped our users create the most authentic communities online. The specific community we'd like to talk about today is Wall Street Bets. It's important to understand that Wall Street Bets is one of many finance and investing related communities on Reddit. This particular community specializes in higher risk, higher reward investments than what you might find in other more conservative financial communities on Reddit, with such names as personal finance, investing, and financial independence. I will stress that Wall Street Bets is first and foremost a real community. The self-deprecating jokes, the memes, the crass at times language all reflect this. And if you spend any time on Wall Street Bets, you'll find a significant depth to this community exhibited by the affection its members show one another. They are just as quick to support a fellow member after a big loss as they are to celebrate after a big gain. A few weeks ago, we saw the power of community in general and of this community in particular when the traders of Wall Street Bets banded together at first to seize an investment opportunity not usually accessible to retail investors, but later more broadly to defend all retail investors against the criticism of the financial establishment. With the increase in attention, Wall Street Bets unsurprisingly faced a surge in traffic and new users. At Reddit, our first duty in these situations is to our communities, and our role in this moment was to keep Wall Street Bets online. Working around the clock, we scaled our infrastructure, made technology changes to help this community withstand the onslaught of traffic, and we acted as diplomats to help resolve conflict within Wall Street Bets leadership. We have since analyzed the activity in Wall Street Bets to determine whether bots, foreign agents, or other bad actors played a significant role. They have not. In every metric we checked, the activity in Wall Street Bets was well within normal parameters, and its moderation tools were working as expected. We will, of course, cooperate with valid legal requests from federal and state regulators. That said, we do believe that this community was well within the bounds of our own policies. To conclude, I would like to reiterate why it is important to protect online communities like Wall Street Bets. Wall Street Bets may look sophomoric or chaotic from the outside, but the fact that we're here today means they've managed to raise important issues about fairness and opportunity in our financial system. I'm proud they use Reddit to do so. Thank you, and I look forward to your questions.
Thank you very much, Mr. Huffman. Mr. Gill, you are now recognized for 5 minutes to present your oral testimony.
Thank you, Chairwoman Waters, Ranking Member McHenry, members of the committee. I'm happy to discuss with the committee my purchases of GameStop shares and my discussions of their fair value on social media. It is true that my investment in that company multiplied in value many times. For that, I feel enormously fortunate. I also believe the current price of the shares demonstrates that I've been right about the company. A few things I am not. I'm not a cat. I am not an institutional investor, nor am I a hedge fund. I do not have clients, and I do not provide personalized investment advice for fees or commissions. I'm just an individual whose investment in GameStop and posts on social media were based upon my own research and analysis. I grew up in Brockton, Massachusetts. My family was not wealthy. My father was a truck driver and my mom a registered nurse. I was one of 3 kids and the first in my family to earn a 4-year college degree when I graduated from Stonehill College in 2009. That was not a good time to be looking for a job. From 2010 to 2017, I worked at a few startup companies, but there were significant periods when I was unemployed. I took an interest in the stock market, and even though I had very little money, I used those times to educate myself and learn more about investing. In April 2019, after nearly 2 years unemployed, I accepted a marketing and financial education job at MassMutual. My wife Caroline and I were thrilled that I had an income and benefits. My job was to help develop financial education classes that advisors could present to prospective clients. I was not a stockbroker or a financial advisor. I did not talk to clients, and I did not recommend stocks for them to buy. Before and after I joined MassMutual, I studied and followed stocks. One of those was GameStop. In early June of 2019, the price of GameStop stock declined below what I thought was its fair value. I invested in GameStop in 2019 and 2020 because, as I studied the company, I became more and more confident in my analysis. 2 important factors, based entirely on publicly available information, gave me confidence that GameStop was undervalued. First, the market was underestimating the prospects of GameStop's legacy business and overestimating the likelihood of bankruptcy. I grew up playing video games and shopping at GameStop, and I plan to continue shopping there. GameStop stores still provide real value to consumers and reliable revenue for GameStop. Second, I believe that GameStop has the potential to reinvent itself as the ultimate destination for gamers within the rapidly growing $200 billion gaming industry. GameStop has a unique opportunity to pivot toward a technology-driven business. By embracing the digital economy, GameStop may be able to find new revenue streams that vastly exceed the value of its business. I am hardly the only person who has advocated these points. When I wrote and spoke about GameStop on social media with other individual investors, our conversations were no different from people in a bar or on a golf course or at home talking or arguing about a stock. Hedge funds and other Wall Street firms have teams of analysts working together to compile research and analyze shares of companies. Individual investors do not have those resources. Social media platforms like Reddit, YouTube, and Twitter are leveling the playing field. The idea that I use social media to promote GameStop stock to unwitting investors and influence the market is preposterous. My post did not cause the movement of billions of dollars into GameStop shares. It is tragic that some people lost money, and my heart goes out to them. But what happened in January just demonstrates again that investing in public securities is extremely risky. As I said earlier, I consider myself and my family fortunate with our investment. When the stock price broke $20 in December, I knew my investment was a success. I was so happy to visit my family in Brockton for the holidays. The money will go such a long way for us. We had an incredibly difficult 2020. Most difficult was the tragic and unexpected loss of my sister Sarah in June. I am grateful to be in a position to give back to and support my family. As for what happened in January, others will have to explain it. It's alarming how little we know about the inner workings of the market. And I am thankful that this committee is examining what happened. I also want to say that I support retail investors' right to invest in what they want, when they want. I support the right of individuals to send a message based on how they invest. As for me, I like the stock. I'm as bullish as I've ever been on a potential turnaround for GameStop, and I remain invested in the company. Thank you. Cheers, everyone.
Thank you, Mr. Gill. The market volatility surrounding GameStop and other securities has highlighted how many people feel that the cards are stacked against them, and that market participants, like our witnesses, hide the ball. Mr. Tenev, you explained that Robinhood restricted transactions in certain securities to meet demands coming from your clearinghouse. And yet, on January 28th, you represented to the media that there was no liquidity problem. Isn't it true that being concerned about having enough capital to meet deposit requirements, isn't that a liquidity problem? Or could you just answer yes or no?
Chairwoman Waters, I appreciate the opportunity to address that.
It's yes or no.
We always felt comfortable with our liquidity and the additional capital that Robinhood
Please
raised.
answer yes or no.
We always felt
To get
comfortable
through my
with our
5
liquidity.
minutes, I don't have time. I just need a yes or no answer.
I stand by my statement. The additional capital we raised wasn't to meet capital requirements or deposit
So the
requirements.
gentleman,
Excuse me.
I'm reclaiming my time. This liquidity problem had real consequences for your customers, but I wonder if they were all that surprised. Between December 2019 and December 2020, Robinhood customers experienced monetary losses due to system outages. Customer accounts were reportedly compromised. The firm repeatedly failed to testify its best execution obligations, and it misled its customers regarding its revenue sources. It seems retail investors often get a bad deal at Robinhood. Mr. Tenev, also, while you testified today that, quote, Robinhood's customers benefit greatly from payment for order flow, quote unquote, in December 2020, the SEC charged Robinhood for not disclosing that it was getting paid to send customer trades to Citadel Securities and other market makers, and for not seeking the best terms for its customers' orders. Robinhood provided such inferior trade prices, it cost your customers over $34 million. Is your testimony after Robinhood paid, is it your testimony after Robinhood paid the SEC $65 million to settle those charges, that this conflict of interest is in your customers' best interest? Yes or no?
Chairwoman Waters, first let me say regulatory compliance is at the center of everything that we do. We've made mistakes in the past. I'm not claiming that.
But could you answer yes or no to that question?
So Citadel Securities is an important counterparty. Nobody's denying that. The reason that
Gentlemen, can I answer yes or no? I'm reclaiming my time. I now recognize the distinguished ranking member, Mr. McHenry, for 5 minutes for questions.
All right, thank you. Mr. Tenev, I'm going to come to you first. I just want to get to what happened on that day in January. So let's take a step back here. You get a call in the middle of the night, according to what I've heard you in interviews say. And based off that conversation with your compliance team, you decided to halt the buying of GameStop stock. People were furious. We'll get into the regulations and the settlement parts of that today. We will get to that. But this is what I think needs to be answered about your decision. Why did Robinhood restrict the buying but not the selling of GameStop? And why did folks get locked out on the buy side only?
Ranking Member McHenry, I appreciate the opportunity to address that. The reason that Robinhood, first of all, let me say Robinhood is always committed to providing access. It's in our name. It's in everything that we do. The decision to restrict GameStop and other securities was driven purely by deposit and collateral requirements imposed by our clearinghouses. So buying securities increases our collateral requirements. Selling does not. Moreover, preventing customers from selling is a very difficult and painful experience where customers are unable to access their money. So we don't want to impose that type of experience on our customers unless we have no other choice. And even though I recognize customers were very upset and disappointed that we had to do this, I imagine it would have been significantly worse if we prevented customers from selling.
Okay, so let me ask this question. Is payment for order flow legal?
Yes, payment for order flow is legal and regulated and a common industry.
And is this disclosed to those users of your app?
Yes, payment for order flow is disclosed in multiple places. And moreover, payment for order flow enables commission-free trading. And that's why it's become the industry standard model, as other brokerages have replicated our model and started offering commission-free trading to their customers as well.
Okay, so to that, to this greater point of what happened that day and the model that you're using, let's be crystal clear. That decision you made to restrict the buying but not the selling of GameStop was based. What was it based on? Pressure from anyone on the witness panel here today?
Not at all. Zero pressure from anyone. It was a collateral depository requirement decision made by our Robinhood Securities president.
All right, so let me get into this other question. Let me get into this question. You want to democratize finance. You want to open up Wall Street to retail investors. You say that Robinhood's mission is to democratize finance for all. So let's talk about that. So yes or no, can a Robinhood customer invest in Robinhood, the company?
Robinhood's currently a private company, so that's not possible, no.
And so you mean to tell me that the people that use your platform, that make you a successful company, and I would say directly contribute to your company's exponential growth and success, they don't get the same access to equity shares as a Robinhood employee or your institutional investors. Is that correct?
Currently, that is correct, yes.
Mr. Tenev, you stated in your testimony that Robinhood restricted trading for certain securities, including GameStop, in order to meet your financial requirements with your clearinghouse. But when I go to Robinhood's website and the blog post you initially released on January 28th, your financial requirements with your clearinghouse are not mentioned. You only mention market volatility. And when I review the Robinhood customer agreement, you don't include specifics on how and when you may decide to restrict trading, which you did. And you don't include any language or disclosures regarding your capital requirements. It only includes vague language that at any time and in its sole discretion, Robinhood can restrict trading. In other words, you seem to reserve the right to make up the rules as you go along. So I have two questions for you. First, do you think you owe your customers more disclosure and transparency than you gave them? And second, do you believe your lack of candor with your customers might have contributed to the wild speculation and confusion that resulted in the aftermath of your trading restrictions?
Congresswoman, I appreciate the question. So to answer the second question, look, I'm sorry for what happened. I apologize, and I'm not going to say that Robinhood did everything perfect and that we haven't made mistakes in the past. But what I commit to is making sure that we improve from this, we learn from it, and we don't make the same mistakes in the future. And Robinhood as an organization will learn from this and improve to make sure it doesn't happen again. And I'll make sure of that.
Well, I expect we will experience future events with increased volatility, and Robinhood's recent actions appeared arbitrary, which is why I don't blame customers for feeling treated unfairly. Your trading restrictions came out of the blue, and your communication was not clear. So my next question, Mr. Tenev, looking forward, what operational changes is Robinhood making to better respond to future market volatility, to improve transparency with your customers, and to ensure retail customers don't get the rug pulled out from under them at the last minute?
Thank you for that question, Congresswoman. We'll be committing to reviewing absolutely everything about this. The $3.4 billion that we raised, I think, goes a long way to cushioning the firm from future market volatility and other similar black swan events. And I believe that even throughout this process, we improved our risk management processes and strengthened them so that the experience customers had on Friday of that week was much improved from Thursday.
Thank you
And
very much.
we'll continue to learn and improve upon this.
Mr. Tenev, it appears at the time your company did not have enough money to meet the collateral requirements for that level of trading by your customers. In your view, A, were the collateral requirements from the DTCC unreasonably high? Was the amount of trading on your platform unforeseeable? Or was your company undercapitalized given its risk profile?
Thank you for the question, Congresswoman. So this event was a 5 Sigma event, which is a 1 in 3.5 million event. To put that in context, there have only been tens of thousands of stock market days in the history of the US stock market. So a 1 in 3.5 million event basically is unmodelable. That said, we can learn from it. And in this particular case, our risk management processes worked appropriately to keep us in compliance with all of our deposit requirements and collateral requirements.
Well, Mr. Tenev, I realize that you are doing a full review of your practices and such. I encourage you to do that. And certainly communication with your investors is going to be key to that because you didn't communicate with them early on.
Mr. Sherman, you're recognized for 5 minutes.
Thank you very much. We've come to expect things on the internet to be free. When you're not paying for it, it's not free. You're the product, someone else is the customer. When you go onto Facebook and it's free, you're the product being sold to the advertiser, and your information is sold to God knows whom. So we now have a system where we're telling investors that it's free to invest to buy and sell stock. There are 2 ways to pay the folks involved in Wall Street for buying and selling stock. One is a commission, and you know what it is. And so we discourage investors a little bit from buying and selling stock because they have to pay a commission and they know they're paying a commission. The other way to do it is to give them a worse execution. Whenever there's a stock being purchased and sold, the market maker, perhaps Citadel, might be willing to sell the stock for $10.05, but will buy it for only $10. The difference is 5 cents. And so the issue is whether Robinhood and other people who are being told you get it for free are really getting it for free. Mr. Griffin, you're a market maker. You pay some brokers for order flow. You don't pay others for order flow. So when you pay for order flow, you're not making as much on the transaction. You have to pay some of that back to the broker. That's hidden the amount of that is hidden from the customer. The fact that it exists has perhaps recently been disclosed. SEC rules require that people get the best execution, but I've recently learned that there's best execution and enhanced pricing. So if you get an order from Fidelity and you get an order from Robinhood and you're paying for the Robinhood order flow, is the Robinhood customer getting as good a price as the Fidelity customer? Mr. Griffin.
So Congressman, I believe that's an excellent question. The execution quality that we can provide as measured in terms of price improvement is heavily related or correlated to the size of the order that we receive. So if I were to speculate,
Don't tell me that that there are other factors involved and take us down another road. I'm asking you a clear question. Assuming same size of order, one comes in from Robinhood, one comes in from Fidelity. Is it not true that one is going to get a enhanced best execution and the other one is just going to get best execution?
So as I was trying to explain, because the Robinhood order comes from a community of traders who tend to trade in smaller size.
That isn't my question, sir. You're evading my question by making up other questions. Let me repeat. 2 identical orders come in. Same stock, same quantity. One's from Robinhood, one's from Fidelity. What happens?
The quality of the execution varies by the channel of the order. This is a commonly understood phenomena in economics that channels matter. So for example, when you go get a mortgage from JP Morgan to their clientele has a different rate of interest than a mortgage.
Okay, reclaiming my time, sir. Who gets the better deal? The one that comes from a broker who is being paid for order flow and one not. Can you testify that on balance, there is no difference, assuming the same size of the order?
So as I said earlier, size of the order is only one factor.
You are doing a great job of wasting my time. If you're going to filibuster, you should run for the Senate. Everyone else I've talked to in this industry says when you pay for order flow, you get when your broker is being paid for order flow, you get a worse execution. Otherwise, you're in a peculiar circumstance where you're making more money on a Fidelity transaction than a.
Let's talk about the attention that this pay for order flow has received. You explained in your testimony, Robinhood's relationship with market makers is important for Robinhood's ability to offer commission-free trading. So expand, if you would, on how that process benefits the everyday investor. And just expand in general on that, if you would.
Congressman, I'd be happy to. Thanks for giving me an opportunity. So as I mentioned in my written testimony, payment for order flow enables commission-free trading. Prior to Robinhood changing the industry standard model to be commission-free, most brokers collected a commission on top of the payment for order flow on every transaction. Now, Robinhood routes to market makers, including Citadel Execution Services. We've got 7 in total across equities and options. And we route without consideration for payment for order flow. All payment for order flow arrangements are uniform across the market makers. And our system routes orders based on who provides the best execution quality for our customers. So the reason Citadel gets a relatively high percentage of our customer order flow is because they provide superior execution quality for our customers. And that's first and foremost the most important consideration that we look for. How are our customers getting the best execution quality? If another market maker were to improve upon the execution quality that Citadel Execution Services provides on any subset of orders, our system is set up to automatically route more traffic to that market maker.
Continuing down this line, because clearly this is one of the things that my colleagues and the public has a very strong interest in. And having lived through Dodd-Frank before, I see where sometimes major things can occur. I want to turn to Mr. Griffin. Could you also elaborate on how payment for order flow provides, whether it's the best price to the retail investor from the market maker perspective? Could you expand on that
Congressman,
as you outlined in?
Absolutely, Congressman. So as the CEO of Robinhood just set forth clearly, the orders that are allocated amongst the market makers today are allocated principally on the basis of price improvement. We have fought for 15 years to make that the basis by how which orders are allocated, because we strongly believe that Citadel is able to provide a better execution for retail orders in the long run. We make a huge investment in our team and our technology to do so. How is it that we are able to provide better execution quality than exchanges? Because exchanges are limited in their ability to do business by regulatory mandate. Exchanges by law have a minimum 1 cent wide market, which for low price securities means that they are less competitive than they otherwise could be. We're able to
So are you here and what are you doing?
Excuse me?
That wasn't either one of us. Continue, Mr. Griffin.
All right. So we're able to share our trading acumen with retail investors, and we're able to give them a better price, and we're able to make payments for order flow to firms like Robinhood that allow them to have lower, or today in most cases, no commission. And of particular note, we're able to help Robinhood and other brokers pay exchange fees to the exchanges at the time of execution. This has been very important to the democratization of finance. It has allowed the American retail investor to have the lowest execution cost they've ever had in the history of the U.S. financial market.
Kind of in the Dodd-Frank process that the chairman and I went through a decade ago, plus there was much discussion about margin requirements. Give us just a discussion for an instant about when you discovered you had a $3 billion additional margin call.
So, thank you, Congressman. I believe the full play-by-play of that situation was described in detail in my written testimony. Just to clarify, though, this decision had nothing to do with margin.
Expired, unfortunately.
I was going to start actually with this and ask each one of you why you thought you were here today. But I'm going to dispense with that because it's going to take too much time, and I'll provide the answer. Political theater for the most part. That's what this hearing is today. I mean, we're on the business channels right now and on C-SPAN. I think if you see a few of my colleagues playing to the cameras, but we need to have some of these fundamental and important questions answered at the end of the day. And one of the assertions that you've heard already today is that investing is, quote, casino gambling. It's using monopoly funny money. I guess I want to know, is individual retail participation in the marketplace gambling, casino gambling, or using funny money? Mr. Gill, why don't we just start with you? Very quickly. I don't hear him. Mr. Huffman, let's move to you.
No, I believe that investing is investing.
Okay. Mr. Griffin?
I believe the vast, vast majority of retail participation are people saving to meet their dreams.
All right. Mr. Tenev?
Congressman, thank you. As I mentioned in my opening statement, Robinhood customers have essentially made over $35 billion in unrealized and realized gains on all of their assets.
It's a thing for them, correct?
Absolutely, it's investing and it's building wealth.
Go back to Mr. Gill. Gill?
Yes, of course. I do. I believe it's an opportunity for investors to participate in the market just as institutionals participate.
Okay, so actually the business channels had a good question from one of the Reddit readers, which is, so you recommended GameStop before. Would you buy their stock now at roughly 45? It started at 48 earlier today. You were talking about buying it and being happy when it hit cross 20. So are you buying that stock today?
Well, let me just say that investing can be risky, and my particular approach to investing is rather aggressive and may not be suitable for anyone else. But for me personally, yes.
So yes or no, are you buying the stock? And
For me personally, yes, I do find it's an attractive investment
my-
at this price point.
quick question. Did you invest in GameStop because you were not aware of the payment for order flow? That's one of the accusations. People bought into this because they don't know that.
Sorry, could you repeat that question?
Did you buy GameStop because you were not aware of the payment for order flow?
My investment in GameStop was based on the fundamentals.
Okay. I think that answers it. I believe my time has expired.
And so I guess the question would be, here today, we're discussing the actions around Robinhood, all the transactions that took place. And I guess, do you think we need more legislation as a result of what happened here, or did the system actually work? And let me just make a couple comments on that part. From the standpoint that, did it work? Was it self-correcting? Did the fact that somebody like yourself was able to invest and maybe take advantage of the over-shorting positions by the hedge fund guys who were trying to really drive down the price of the stock for other reasons, whatever? Or did it point out perhaps that we had some companies, perhaps like Robinhood, I would argue that was undercapitalized or under-reserved? Or maybe there was over-aggressive other types of investing that was taking place. The algorithms that were there, the different business models, they didn't work because you outsmarted the system, so to speak. Would you like to comment on that, on that sort of questions and how I formatted that?
Thank you for the question, Congressman. I would say my expertise is in analyzing the business, the fundamentals of the business, not so much on the inner workings of the market. I'm not so sure about legislation per se. What I would say is that increased transparency could help. That if someone like me could have a better understanding of how those types of things work, I feel as though it would be quite beneficial to retail investors.
Thank you for that. I know that Mr. Tevin, Robinhood has an interesting name. As I recall, the old story is take from the rich, give to the poor. And I assume what you're doing is allowing the poor to compete with the rich, which is interesting. You made the comment in your testimony, Mr. Tevin, about settling this in real time. We have the electronic ability to do this. I think that would probably help the situation that occurred here. But what other problems occur when you do this in real time? What other things would we have to look at? What other unintended consequences would there be if you did something like that?
Thank you, Congressman, for the question. I believe that right now, certain market participants rely on next day settlement to be able to take advantage of intraday netting and run up larger one-sided positions in certain stocks with the knowledge that they can close those positions or reduce them by the time settlement happens. And I understand that would be a limitation to the trading activities of some of these institutions. So that's certainly one area to consider. The other is around securities lending. We'd have to make changes to how securities lending works. I don't think any of these are insurmountable challenges, and I'd be happy, as I mentioned earlier, to deploy our intellectual capital and our team's engineering resources to help solve these problems very quickly.
Thank you for that.
Let me start with you, Mr. Tenney. Let's go through this. The sequence of events that led to the extreme rise in value of GameStop stock and the subsequent market volatility originated through a Reddit discussion. And then that was fueled through social media. And as the story gained traction, tweets by well-known figures with the influence to move markets sent the stock value even higher and higher. So let me start with you, Mr. Tenney. What policies does Robinhood have in place to monitor what happened on social media and how it drives the use of your trading platforms?
Thank you for the question, Congressman. Currently, Robinhood does not perform any sort of moderation of social media. We simply don't have the data that the social media platforms have at their disposal to tie these posts to identities. We do, however, within Robinhood Securities, conform to all regulatory requirements around monitoring and trade surveillance and all things of that nature.
Well, Mr. Kenneth, don't you see something is going terribly wrong here? What do you do to monitor the trades in individual stocks, particularly when, in the case of GameStop, they are singled out and moved on social media? What do you do?
I appreciate the question. So our priority throughout the exceptional market conditions in January and early February was to maintain the uptime and performance of our platform and make sure that we're available to customers.
Let me try to get to a point here. Do you, Robinhood, do you have any policies in place to ensure that investors are making trades based on legitimate material, financial information, and not the influence of social media, the design of trading platforms, or any other superfluous information? Do you have anything, any guard to that?
Absolutely. Congressman, we provide educational resources to our customers, including our redesigned Robinhood Learn portal, which is not just available to Robinhood customers, but to the general public, and had over 3.2 million people visiting in 2020.
But don't we need, do we not, I mean, you're at the center of this. Don't you see and agree that something very wrong happened here and that you're at the center of it? And we are looking on this committee of how we can protect our wonderful, precious financial system. We need it from you. What about you, Mr. Huffman? Do you have anything? What steps is your company taking to guard against this? Anything at all?
Congressman, we spend a lot of time at Reddit ensuring the authenticity of our platform. So we've got a large team dedicated to this exact task. Everything on Reddit, all of the content is created by users, voted on by users, and ranked by users. And we make sure that that is authentic and as unmanipulated as possible. And in this specific case, we did not see any signs of manipulation.
But let me start with you, Mr. Tenev. I'm just curious if you can give it to me in a short period of time. How did you come up with your name for your company?
Absolutely. Thank you for that question, Congressman. Robinhood stands for lowering the barrier to entry and democratizing finance for all. So the idea is the same tools that institutions and wealthier high net worth individuals have had for a long time should be available to the people regardless of their net worth or how much money they have.
Okay, I appreciate that answer. Because it's something I would also embrace. However, I have a 23-year-old on the other side of the house who I love dearly, but he has no training, no income, no qualifications. How in the world could he get like $1 million worth of leverage?
Thank you, Congressman. So the leverage that we provide to our customers, which less than 3% of our customers actively use, is regulated strictly by requirements. So the only way to get that amount of leverage in a margin account through borrowing is to deposit a similarly sized amount of capital.
Or by mistake.
Congressman, I'm not sure what you're referring to.
Well, I mean, there's a record of a young man getting $1 million worth of leverage. He was only 20 years old. So I'm just saying, you know, if that's not a policy, that was an error.
Congressman, I appreciate the opportunity to address that really important point. You're referring to Mr. Kearns.
I am.
The man who unfortunately passed last year.
Yes.
First of all, I'm sorry to the family of Mr. Kearns for your loss. The passing of Mr. Kearns was deeply troubling to me and to the entire company, and we have vowed to take a series of steps, very aggressive steps, to make our options product safer for our customers, including changing the customer interface, adding more additional options education, as well as strengthening and tightening the requirements for people getting options, and adding a live customer support line for acute options cases. So it was a tragedy, and we went into immediate action to make sure that we made not just the most accessible options trading product for our customers, but the safest as well.
Okay, I asked that question. In my real life, I'm a United Methodist pastor, and so I've read your statement. You know, after the tragedy of this young 20-year-old, but I mean, and I don't think you nor I want to get in. I mean, to litigate that right here today. But you know, what improvements did you make in the aftermath to your platform, or were there improvements?
Thank you, Congressman. There were several improvements. One, we added the ability to instant exercise as well as exercise options positions in app. We clarified the display of buying power, specifically negative buying power, in situations where one leg of a complex multi-leg options transaction were to be assigned. We also added an options education specialist. We also added live phone-based customer support for acute options cases, which has gotten very, very great feedback from customers and is something we're expanding to other use cases, such as cases where customers' accounts have had off-platform hacking incidents.
Do you have a call center generally for Robinhood investors?
Thank you for that question, Congressman. And I want to start by saying customer service is fundamental to everything that we do, and it's one of the areas where we're investing the most. We have customer service centers in a number of states: Colorado, Florida, Texas, and Arizona, and we're looking to expand aggressively.
Do you have a call center that I can call, a 1-800 number, if I'm having a trouble in the middle of the trading day?
We do offer, Congressman, live phone support in app for certain use cases. We're expanding that as fast as we can.
Yeah.
So as I mentioned earlier, options, advanced options cases, as well as account takeovers, which typically happen through a customer's personal email who's been compromised. And the feedback's been great, and we're looking to expand the live phone channel, as well as make improvements to our email channel and even upstream within the product.
Thank you. That's helpful. And on the subject of margin and options, you've talked about that today. But you know, I've spent 40 years in this business and been the general securities principal in 3 different firms. And this issue of granting margin and option approval to retail clients is always an important issue. You've addressed that today, so I want to turn to a different topic that has not been raised, and that's low dollar stocks. As I understand it, your policy and procedure manual simply said that you allow low dollar stocks if they're on an exchange, but many brokerage firms are very reticent to allow retail investors to invest in stocks that are under $5. Could you address that issue today?
Yes, I'd be happy to, Congressman. So Robinhood allows customers to trade in and invest in exchange-listed securities. So that's the objective criteria that we use. And it actually excludes several types of securities that customers commonly request to trade in. So on Robinhood, you can't trade over-the-counter bulletin boards, except in limited cases where a listed stock falls to over-the-counter. You can't trade pink sheets. And of course, you can't short sell or enter undefined risk options trades.
Okay.
So our objective criteria involve whether exchanges list these securities.
Thank you.
GameStop in the summer of 2019. Was that your testimony?
I wanted to know, yes.
Congressman, I've been following GameStop for a number of years. I started to buy into it in June of 2019, most recently.
Hey, so back then, what was the price of the stock when you started investing in it?
At the time, it was in the ballpark of around $5 per share.
Okay, and in your analysis, what did you think the proper price for the share was? Because you thought you were getting a good buy.
Sure. At the time, I thought that the value of the business could be worth up to roughly $2 billion.
Okay, but how much is that per share? Just let's bring it back to you bought at 5, you thought it was worth 10, 20?
I felt as though that it could be worth at the time in the range of say $20 to $25 per share.
Okay. And you continued to invest on and off through 2019 and 2020. Is that true?
Yes.
Okay. And you also, you bought long, you bought some shares, but you also did some options trading, did you not?
Correct. I did.
And options trading is not really for the novice investor, is it?
It is a riskier investment, yes.
Okay. On January 27th, I think the stock price hit $483 or something like that. Is that true?
I believe it was in that area, yes.
In your analysis, back when you started investing in the stock, did you ever see it being valued at $483 per share?
At the time, I thought it was possible, but a very low probability, I thought.
Okay, thank you. Just a couple more questions. In terms of the platforms where you visited and discussed this stock with others, one was the Reddit subreddit Wall Street Bets platform, correct?
Correct.
And at any given time, how many people were you talking to on that platform?
I wasn't so much talking to anyone individually, but rather making posts on that public forum.
That GameStop was an attractive stock.
Yeah, early on, I had felt that it was an attractive investment opportunity, and I had shared some of my thoughts as to why that was.
Did you discuss this on any other platforms? Are there any other kinds of Reddit or other kinds of platforms that you talked about the stock?
Yes, I have talked about the stock on some other platforms.
Okay. Did you ever talk about the short sellers that had bet against this company?
Yes, the topic did come up.
And about when did that occur?
Oh, since around the time I had begun investing in it, it was, as someone else has noted, it was an exceptional level of short interest in the stock since the time I had started investing in it.
Okay. Let me turn my attention now to you, Mr. Plotkin. When did Melvin first take a short position in GameStop?
Thank you, Congressman. That was in 2014, really right at our inception of the fund.
And when you did that, did you continue to maintain a short position?
That's correct.
So you said you analyzed the value of the stock, and you, by taking a short position, you, unlike Mr. Gill, thought that the stock was overpriced. He thought it was underpriced. You thought it was overpriced.
That's a good conclusion. Yes.
Okay. In your analysis, when you started into the short position, what did you think the stock was worth?
I don't remember exactly at the time. I think when we launched, it was probably a $40 stock. I think we believe the company had a lot of structural challenges. We've seen their earnings go from, I think, north of $3 a share to almost negative $3 a share. So There's been a lot of challenges fundamentally.
All right, last question for you. Were you in a naked position in your short position because the stock was oversold?
No, our systems won't even allow that. So that would be impossible for us to do.
Okay, well, thank you. My time's expired.
Mr. Tenev, I'd like to follow up a little bit on payment for order flow and best order execution issues. Democratization of finance is a good and noble goal, but for democracy to work, consumers need transparency and high quality information, and not only about fees, but about order execution quality. Your customers actually don't care directly about who you subcontract order execution to or any payment for order flow, but they need a simple way to compare the execution quality between your app and competing apps or other accounts. And while institutional investors can afford to run their own tests, and they do, and I'm sure Mr. Griffin is normally is quite often on the receiving end of those tests and trying to measure up to his competitors to compete for market share there. The institutional investors have the market power to demand best execution statistics for their prime brokers. And everyday investors do not get the same transparency. In fact, I believe there's an SEC rule 606, that requires brokers to disclose at least some order execution data to institutional investors. But this requirement does not apply to retail investors. So, Mr. Tenev, since Robinhood's mission is to democratize finance for all, I ask, what are the mechanisms that you would accept and support to provide transparent order execution quality statistics so that your customers can engage in a clean apples to apples comparison between other brokers, between your app and other people's apps in terms of the total cost of trading?
Thank you, Congressman, for that very important question. I'm generally in favor of a greater amount of transparency than what we've typically seen in the financial industry. And recently, Robinhood and me personally have engaged publicly on the topic of payment for order flow, short selling, and of course, T+2 and real-time settlement. We do publish 606s via Robinhood Securities that detail our payment for order flow arrangements with various market makers. And just this past year, the industry implemented more detailed 606 requirements, which we of course conform to. Also, back in December of 2020, we released a public page on our website that provided detail about the execution quality, including price improvement that our customers received. And we're proud to announce in 2020, our customers received in aggregate over $1 billion of price improvement on their executions.
Right, but that's not a comparison to your competitors. There are a lot of questions about the accuracy of the best execution reference price. And independent of whether it should be improved, it seems like if I was a customer of you or one of your competitors, what I'd want to see is, I just executed a trade of $2,000 and on average I got X% better or worse than a reference price. And then over time, and see not only the trade that I just executed, but perhaps a running average over the last month or two that you can compare to the running average of whether you're exceeding some benchmark for trade execution quality that can really be compared with potential competitors. And is that a workable system? Are there difficulties? Is there a reason why industry shouldn't move that way in the name of transparency to customers?
Congressman, this is a very interesting topic to me. I'd love to have the conversation. I don't know if this is the right forum to necessarily ideate and brainstorm on all the solutions, but I just want to say I'd be happy to engage with this in a detailed forum and figure out the right path.
Okay, well, yeah, we do intend to continue to engage with the industry on this subject because it's very easy to make payment for order flow sound really creepy. You're basically selling a list of rubes to the sharks. Okay, on the other hand, you make part of an argument that this can net out positive for consumers, but for it to fully net out positive, they have to be able to make the apples to apples comparison. And so that's, I think really really an important issue. And I think that probably your reaction to that, if you found your customers were leaving you because of poor execution quality, you would do what large funds do, which is to split your order flow between multiple order execution firms and then demand of them the best order execution and move your business to whoever does the best for your customers.
Yes, well, Congressman, we already do that. We have 7
Time has
market
expired. Mr. Mooney, you're recognized for 5 minutes.
Thank you, Madam Chairwoman. So let me just start by saying that last Congress, 30 of my Democrat colleagues, 4 of whom on this very committee, co-sponsored a bill that would impose a financial transaction tax on the purchase of securities and certain derivatives. And just recently, after the market volatility surrounding GameStop in January, Democrats renewed the call, many Democrats anyway, renewed the call for a financial transaction tax. On just January 28th, Congresswoman Ilhan Omar tweeted, "How about this? Financial transaction tax now." Congressman Peter DeFazio is the lead sponsor of the bill. He's already put the bill back in for this session of Congress. It's now House Resolution 328 of 2000. So it's called the Wall Street Tax Act of 2021. I actually have a copy of it from the last session here. It's in again now. And he says, Congressman DeFazio says that a financial transaction tax would, quote, help create a more level playing field for Main Street. So with that background, Mr. Tenev, this question is directed at you. The Robinhood platform has more than 13 million users, and most of them are small dollar retail investors. If the federal government levied a 0.1% transaction tax on the sale of securities, how, and I know one of my colleagues, French Hill, my good friend, mentioned this earlier, but I want I want to expand upon it a little more. How would that 0.1% transaction tax on the sale of securities affect your platform and the retail investors that are your customers?
Thank you, Congressman. And we'd be happy to engage in this discussion much more in the future. A 10 basis point financial transaction tax would eat into the returns of our customers, which, as you pointed out, are largely smaller investors. And in that sense, it would be a cost to the retail investor. Of course, that would have to be weighed against the potential benefits of this tax. And I know it's a more complicated issue than meets the eye at first glance.
Okay, well, thank you for that answer.
My first question is to the CEO, President Ken Griffin. In the first 3 quarters of 2020, your company paid online brokerages like Robinhood $700 million for their order flow. Do you believe that brokers like Robinhood can service the best interest of their users while selling their order flow to companies like yours? And that's yes or no.
Congressman, I believe that Robinhood actually goes further in meeting the best interest of customers by, in fact, routing their order flow to Citadel. We give a better price, a better execution for American retail investors than the alternative of going to exchanges.
So I'm going to take that as a yes, since you said they go further. Then can you tell me, why did your company urge the SEC to ban the payment for order flow models in a filing to the SEC?
Congressman, that is a terrific question. That filing relates to the U.S. options market. It was a filing back, I believe, in 2004. And in the U.S. options market at the time, trades were committed against listed quotes. We were apprehensive about the direction in which the U.S. options market was heading towards the existence of these price improvement auctions, which diminished the incentives to aggressively provide bids and offers in the options market. We felt that legislative or regulatory efforts to encourage tight quoting, to discourage the existence of these auctions, and this was being, in some sense, fueled by a series of payment for order flow programs, was in the best interest of American institutional and retail investors. Now, regretfully, we did not prevail in our reasoning. The rise of price improvement auctions came into, in essence, the day-to-day model for options trading in the United States. And I do believe that this is a setback for our capital markets.
So, because my clock is ticking, let me ask you this. So, are you saying that you no longer believe that the model is anti-competitive and distorts order routing decisions?
I think it's important to distinguish between a market where you must trade on an exchange. In the options market, we must print the trade on an exchange, versus a market where you can trade off exchange, which would be the US equities market. So just to be very clear, because your question is very good, every single options trade must be executed on an exchange. Equity trades do not. And because of that, I can save Robinhood exchange fees and offer a tighter bid-ask spread.
Okay,
than the
clearly
one
we're going to have a further discussion. Let me interrupt you only because my time is clicking, and I want to follow up with a question for Robinhood's CEO. Several of the brokers offer their users order flow for the sale to the firm, like with the previous CEO with Citadel. However, the price that Robinhood gets for the order flow is much higher than any other brokers receives. And I could go on and tell you we've pulled the SEC filings that Robinhood receives 17% per 100 shares stock of traded and 58% to 100 shares, and I could go on. But the question is, why do companies like Citadel pay a premium for their order flows of Robinhood's users?
Thank you, Congresswoman, for that very important question. There's several reasons that may be the case. One important one is that our model and formula for payment for order flow works a little bit differently. We actually receive payment for order flow as a percentage of the bid-ask spread rather than on a per share basis. And we do believe that that's the most optimal way to structure payment for order flow arrangements.
Okay, is it not because companies like Citadel can make more money off of Robinhood users than others? And that's a yes or no, because my clock is going to run out.
No.
I'm sorry, I yield back. My time is up.
Do you believe that if market infrastructure would guarantee, this is really related to the over musical shares, where someone could be left with no share when the music stops, multiple claims on a shorted stock. If the market infrastructure would guarantee an investor could retain custody of their shares so that the shares can't be lent to short sellers, there could be a downside. How do you feel that only one claim on the shares would resolve this? And that relates to proxy voting as well, or shareholders voting the shares.
Congressman, I believe that that's an important question. It's one that Robinhood and me personally have engaged with. I do believe that the ability for the same share to be shorted an indefinite number of times is somewhat of a pathology, and that should be fixed. And I think step one of that is modernizing the antiquated settlement infrastructure that everything is built on. We simply don't have the ability to properly track what shares have been shorted and how many times as they're moving through our settlement system currently.
Yeah, thank you for that. And I appreciate that you see the relationship. Hopefully broadly we do, and we provide that nudge the market needs. I want to commend Vice Chancellor Travis Laster of the Delaware Chancellery Court for his letter and paper, The Blockchain Plunger, which explains how this could be done. And I ask unanimous consent to submit that to the record. As my time expires, I want to commend you, Mr. Gill, for just representing a large segment of the industry, in my view, where savvy investors have had an opportunity to engage. And it relates to people with diamond hands that hold. So you might not call yourself a holder, you might use the word diamond hands, but thanks and congratulations for your success.
The gentleman's time has expired.
Now, I really care about a level playing field for retail investors to access the market. And I've been a long supporter of financial innovation and fintech and the shared goal of democratizing finance and making access to the financial system easier for all. So, Mr. Tenev, your company, it boasts that it's helping to democratize finance and is at the forefront of innovation. Can you talk a little more about what Robinhood is doing to push innovation forward and create a level playing field for all investors, while at the same time making sure that those investors are well informed?
Absolutely, Congressman. Thank you for that very important question. The first thing I should note is many of the witnesses and representatives here have stated that it's never been a better time to be a retail investor in America than it is right now. I think the combination of zero commissions, no account minimums, fractional shares, really things that Robinhood has helped make the industry standard, have helped small investors and helped level the playing field for people to participate in the markets. Over the past year, Robinhood has released fractional shares, the ability to do automated dividend reinvestments, recurring investments, so that you could take $1 or $5 and create a habitual investment into a particular stock. And the theme of this year for Robinhood is, how do we take a first-time investor and turn them into a long-term habitual investor? How do we make long-term investing accessible for people around the country? And we're making huge investments in education and customer support to support that. We recently released a revamped Learn portal. We call it Learn 2.0, with the aim of taking a customer from basic concepts such as what is a share, what is a stock, what's an ETF, all the way through to more advanced concepts. And we're continuing to invest more and more on Learn, as well as on Snacks, which is our popular podcast, and all other forms of content that we distribute. Last year, more than 3.2 million.
I want to interrupt you there. I know you have a lot more things. These are great. I know we could probably talk for a lot longer than this, but
Mr. Huffman, what kind of authentication exists for Reddit users to confirm their identities, to verify that they're even real people?
Reddit, and this is an important quality of Reddit, so thank you for the question, doesn't require people to reveal their full identity to use the platform. One of our pillars of privacy, and privacy is something that's critically important to us, is that users should be masters of their own identity, and they can choose to reveal as little or as much as they would like. I'll point out that there are two sides of this that are really important. On one side, this allows Reddit to work. Something like Wall Street Bets would not exist if users had to reveal their full identity, because in Wall Street Bets, people are revealing gains and losses. They're effectively revealing their financial position in life, and we would not put that burden on anybody to force them to do so. I'll also point out that other platforms have real identity, and it doesn't do anything to improve their behavior.
Can I ask a question of that? Is there any way for a regular user of Wall Street Bets subreddit to know what content is genuine, written by other users just like themselves, retail investors who are looking for honest information to invest on? Is there any way for that?
So there are a couple aspects to this. So the first is that we as a company invest significant resources in enforcing the veracity of our voting system. It's something we've been doing for 15 years, long before events like this, long before even the election and the politics of the last few years, where these things have become top of mind for everybody. This has been critically important to us. Also, our user base is exceptionally good at sniffing out untruths, misinformation, fake stories, both within this community and Reddit at large. And so in order for any piece of content to be successful on Reddit, it has to be accepted by that community and receive the same votes that anything else would.
Do you have any heightened standards for places like Wall Street Bets or other investing subreddits where moderators are able to manipulate content to their own financial gains?
We keep a high standard across the entire site. And in with this particular community over the past few weeks, we've been looking especially closely, anticipating these sorts of issues and questions. And to date, we have not found any nefarious behavior.
Got it. But we could have a situation where thousands, possibly millions of dollars of retail investor money may be being manipulated, right? We don't know that.
People in the United States talk about stocks on Reddit They talk about it on TV, in magazines. People can say, they can, in fact, they do on television all the time, encourage people to make what I would call bad investment decisions. On Reddit, I think the investment advice is actually probably among the best because it has to be accepted by many thousands of people before getting that sort of visibility.
Do you see any difference between someone on Reddit offering advice versus an analyst at a major bank or at a financial services firm?
Absolutely. I think on Reddit, you're seeing retail investors who are giving authentic advice based on their knowledge, and you would not, call into question what their motivations are or what large positions they may hold before going on TV and talking about them.
Do you plan to do more in this space, and is this something that's going to be a major priority of yours? And do you think overall social media companies like yourselves should be held to a different standard? Should you be responsible for what happens in your content? If someone manipulates something or if it's a bot, should that be on you, or do you think that's just buyer beware?
We take manipulation of Reddit incredibly seriously. That is one of our, first duties on all of this is to ensure the authenticity of our communities. Yes.
Got it. But do you think you should be held responsible if somebody posts something, if there's some collusion, or if there's somebody who is it's a bot that's online? Do you think you should be on the line, or this is just a site you offer for people to exchange ideas?
Reddit can be held responsible, and we do take our responsibilities here incredibly seriously.
My question to you is, how did you misjudge your capital requirements to prevent people from being able to trade during that period in January?
Thank you, Congressman. I wouldn't say we misjudged our capital requirements. This was a 1 in 3.5 million occurrence event, one that had never been seen before in capital markets. And we had to play this by the book. Robinhood Securities made the decision that we did so that we could remain in compliance with our regulatory capital and deposit requirements. Unfortunately, it required us to restrict the buying of these securities for Thursday and limit it to some degree on subsequent days until additional capital came in that allowed us to relax the restrictions.
It was Robinhood's mistake, though, correct?
Well, Robinhood owns what happened, certainly, and we need to make sure that it doesn't happen again. But Robinhood Securities had limited options with how to address this, and I fully support the team in making the decision that they did, and I believe they did the right thing and the only thing.
I realize you said at the beginning that you're privately held. With that said, is your primary source of revenue from the order flow payments that you receive from some of the players that we've talked about today?
That is correct, Congressman. Payment for order flow is one of our largest revenue sources.
Is it the largest?
It's the largest, yes.
Now, in your testimony, in your written testimony, oral testimony, you talked about the settlement period and what we're probably capable of doing in real time, or instead of T+2, maybe the T+1. If we had real time settlement, would the situation that did occur in January, would that have been preventable? In other words, that wouldn't have happened if we had real time settlement?
Congressman, if we were to have real time settlement, and of course there's some implementation details that would govern this, there would be less of a need for collateral at clearinghouses because the cash and securities transactions would be exchanged in real time. So collateral for counterparty risk would be less necessary. So real-time settlement would lead to reduction, perhaps an elimination in some of these collateral requirements, a reduction in the money that's sort of clogging up the plumbing of the system, and that would have avoided some of these problems altogether.
Thank you very much. Just to be clear, does the same answer apply if I asked you if settlement was T+1 instead of same day settlement? Would your answer be the same?
Congressman, T+1 certainly would be would be better, but it doesn't. It reduces the scope of the problem. It doesn't eliminate it from a technology standpoint.
Thank you very much. Mr. Huffman, if I could, I'd like to follow up on some of the questioning that my colleagues, Congressman Hill and Congressman Gottheimer, asked. You've done an investigation into Reddit, into Wall Street bets. You don't see any bad actors. I'm paraphrasing, but you don't see any bad actors that caused any role in the GameStop frenzy. Am I characterizing that correctly?
Congressman, that's right.
You know that Congress is looking at amending Section 230. What are your thoughts about that as it relates to Reddit?
Sure. So Section 230, I think, is a critically important law to the internet as we know it. And it was created, in fact, to protect a forum in the early internet for talking about stocks. Section 230, I think it's also important to point out, doesn't protect platforms or companies like ours from civil litigation. So there are mechanisms for coming after companies like ours. What it does protect is our ability to evolve the way we moderate our content, and in which we have done in many ways over the last decade.
But I understand that you made your position known on GameStop as far back as 2019 and are lauded as a diamond hands hero by Wall Street bets community. Have you ever previously experienced or observed the type of restrictions Robinhood and other applications performed on January 28th?
Taking Congressman, no, I have not.
Thank you. That's a good question. And Mr. Huffman, I'm not a Redditor, but I do understand the problems around social media and freedom of speech and the tightrope act that goes on where these intersect. In the near decade of Wall Street bets and subreddit, have they shown themselves to be exceptionally problematic, an exceptionally problematic forum, or just one of the many eccentric communities that call Reddit home?
Congressman, I think your latter description is more accurate. They are an eccentric community, but they're well within the bounds of our content policy. And though we do have difficult decisions to make here and there regarding specific communities, one of the things we look to first is whether the community is trying and they're putting their best efforts to be a good citizen of Reddit. And towards that end, we've had consistent communication with the moderators of that community, and they've been doing, I think, an excellent job.
Thank you.
Mr. Tenev, I'm going to start my questions with you by walking through a series of events from that day in January, just to make sure we're all on the same page. So in your testimony, you mentioned that the automated deposit requirements from DTCC came in at 5:11 a.m. Eastern, and it showed a $3 billion deficit, correct?
I believe that's correct, yes.
Okay. At that point, 5:11 a.m., did you have the liquidity to meet the additional $3 billion deposit requirement?
So as we wrote in detail in my written testimony, there were a series of steps that the Robinhood Securities team took to
reclaiming my time, sir. At that exact moment, did you have the liquidity for $3 billion? 5:11 a.m.
At that moment, we would not have been able to post the $3 billion in collateral.
Okay. So when you said, and you've said this multiple times, that you did in fact have the liquidity and you didn't have a liquidity problem, at that moment in time, that is not necessarily true, correct? You had to take steps to get there.
Congressman, we did have to, the Robinhood Securities team had to work with our relevant clearinghouses to adjust the risk profile of the trading day in order to meet our collateral requirements.
Right. And in order to do that, your choice was to throttle trading, to prevent your clients from being able to purchase in certain shares, correct?
That's correct. Robinhood Securities had to restrict buying in about 13 securities.
Okay. And if you had not been able to de-risk the profile or the portfolio, excuse me, you wouldn't been able to raise the money, get the VAR requirement and the excess capital charge waived to de-risk the portfolio, then DTCC would have stepped in and liquidated the portfolio, correct?
I'm not sure what the exact, Congressman, what the exact steps that they would take if we weren't in compliance with the deposit requirements would be, but it would not have been a good situation for the firm or the customers.
So reclaim my time. So the letter that Ranking Member McHenry submitted for the record, I would draw everyone's attention to. I'll just read this. If a clearing member fails to satisfy a margin call, it exposes other clearing members to risk and can put NSCC out of compliance. In a case of non-payment, NSCC may cease to act for the clearing member and liquidate its unsettled clearing portfolio. So that was definitely in the cards. For my constituents who are Robinhood clients, what would this have done to their portfolio if it would have been forced liquidation as a result of missing the capital call?
Oh, well, Congressman, if there was forced liquidation, at the very least, it would have resulted in a total lack of access to the markets for your constituents. Not just to the 13 securities that we restricted buying in.
Right. So this would have been an enormous catastrophe for Robinhood, correct? And the
That's
clients.
correct. And not just Robinhood, but the over 13 million customers that we serve.
Yeah, and I think that's really sort of the crux of the issue. So in a sense, I love your company because it does, when correctly managed, provide investment opportunities for individuals who are currently frozen out of the markets for one reason or another. At the same time, though, I believe a vulnerability was clearly exposed in your business model and perhaps in the regime that governs your capital requirements. And we just can't live in a world where my constituents could have their shares liquidated without their consent because you all aren't able to make a capital call. I appreciate that you were able to ultimately satisfy it. But the amount of time you have from 5 a.m. to 10 a.m. to figure this out is scary for the company. And frankly, I care more about my constituents than anything and scary for them. And so I hope we'll continue to look at that. Beyond that, though, I also hope that this hearing highlights a very real problem with our financial markets today and how they're accessed by everyday investors. Today, the Melvin and Citadels of the world, as well as major PE and VC funds, have access to the world's greatest investment opportunities on the planet, whereas the retail investor world, of which Mr. Gill is a great member, it doesn't, for lack of a better term, has access to an ever diminishing set of investment opportunities. And so while we're debating these vulnerabilities, we're also serious about finding ways to expand access for Main Street investors. And with that, I yield.
Earlier, Mr. Tenev, you said that you couldn't tell us what your client's rate of return is, but generally 99% of short-term traders underperform the market. So, Mr. Tenev, you say Robinhood's mission is to democratize finance. Is that correct?
That's correct, Congresswoman, yes.
Okay, so I want to ask you then, you've invested significantly in behavioral research, and just so you know, I own a digital design firm with my husband, so I'm familiar with what behavioral research can do for platforms and websites. And that behavioral research has really shaped how your app is designed, is that correct?
Congresswoman, like many technology companies, we employ data scientists, user researchers, and designers to provide a better customer experience and understand our customers' needs.
So on the specifics, when people sign up, they get a scratch-off ticket to see what they get. Confetti falls every time they place an order. They get push notifications. They're encouraged to trade. If a friend signs up, they get a free stock, on and on. Why have you added specific gaming design elements to look like gambling to your app? That encourages more frequent trading.
Congresswoman, as I mentioned earlier, we want to give people what they want in a responsible, accessible way. We don't believe in gamification. We know investing is serious, and that's why most of our customers are buy and hold. A very small percentage of our customers utilize margin.
Well, I appreciate that, but you know, folks like my nephew actually aren't your customers. They're your product. Your customer's sitting right next to you, Mr. Griffin with Citadel. So when you don't pay as much for index fund or Apple or anything like that, your app to me shows me that you're really just trying to encourage more trades, which puts more money in your pocket, not helping people build equity through smarter investing. So I would ask you, Mr. Tenev, I'd ask two things. Who exactly do you believe you're democratizing finance for? And how do you plan to address these conflicts of interest?
Well, first of all, I believe in our business model, Congresswoman. I believe our business model has become the industry standard for a reason. It's because it's good for customers. It's led to the democratization of the markets, and it works. And we're very proud to route to market makers on uniform terms without taking into account any of the payments that we generate from them in the routing, and based purely on the execution quality they provide to our customers.
One of the concerns about payment for order is that it creates a perverse incentive for a brokerage firm like Robinhood to send retail orders not to the firms that provide the best execution to retail investors, but rather to firms that provide the highest payment to Robinhood. There's a concern about a conflict between the interest of brokers and the interest of retail investors. And that concern seems to have been vindicated by the conduct of Robinhood. SEC previously found that Robinhood misled its customers about how it makes its money. Both SEC and FINRA previously found that Robinhood failed to ensure the best execution for retail customers, depriving those customers of $34 million, resulting in a $65 million civil penalty from the SEC. My first question for the CEO of Robinhood: how much of your revenue comes from payment for order flow?
Thank you, Congressman. Let me first state regulatory compliance is at the center of everything that we do.
I want to reclaim my time. How much of your revenue comes from payment for order flow? The answer to the question is asked, given the time constraints.
Congressman, I don't recall the exact percentage. It's over 50%.
And how much do you know? How much of your order flow revenue comes specifically from Citadel?
Citadel is indeed an important counterparty. It's our largest counterparty in terms of where we route orders to. And I want to explain that a little bit, Congressman.
Well, I want to move on because I do have to, I want to cover the concerns about gamification. The stated mission of Robinhood is the democratization of finance, but I worry that the real world impact of Robinhood is the democratization of financial addiction. You know, Robinhood has gaming features that seem to manipulate retail traders into making rash and reckless and potentially ruinous investments. We all know the tragic story of Alexander Kearns. According to a memo from the Financial Services Committee, there's one feature in particular that encourages retail investors to tap on the Robinhood app up to 1,000 times a day in order to improve their position on the wait list for Robinhood highly coveted cash management feature. Do you share my concern that a retail trader tapping on a Robinhood app 1,000 times a day is a sign of addiction?
Congressman, that particular feature that you're discussing was to get access to our debit card plus high yield savings product, which is one of the many features targeting passive investors that we've rolled out over the past.
Mr. Tenev, 1,000 times a day? You are encouraging your customers to tap on an app 1,000 times a day? That to me is a sign of addiction, and it worries me that you fail to see it in the same light.
Congressman, we didn't encourage anyone to tap on anything. To get access to the debit card, people were placed on a wait list, and we wanted to give our customers delightful features so that they know that we're listening to them and that we care about them. And this is just one example of how we add great features that customers love to our products.
Look, addictive trading might be bad for your customers, but it's good for Robinhood. Addictive trading means more trading, and more trading means more money for Robinhood. There's a sense in which Robinhood monetizes addiction. You make money from the quantity rather than the quality of trading. I want to, much has been said about price improvement. One of the arguments for payment for order flow is price improvement. According to the Wall Street Journal, Citadel Securities claims to have saved investors a total of $1.3 billion last year. But I'm wondering, how can Citadel possibly know how much it saves retail investors? Citadel does not transact directly with retail investors. It transacts directly with brokers. And even if you stipulate that there has been a cost savings, it's unclear to me how much of that cost savings is being passed on to the retail investors and how much of that cost savings is actually being pocketed by Robinhood as profit, right? We know that there's no commission, there's no visible fee at the front end of the transaction, but what is the hidden cost to investors at the back end of the transaction? Can you give me clarity about the hidden cost to investors? Mr. Tenev?
Congressman, I appreciate the question. I think that's a very important question. In 2020, Robinhood provided our customers in excess of $1 billion in price improvement. So that price improvement is measured relative to the NBBO, the National Best Bid and Best Offer, which is the reference price per security on all major lit exchanges.
I ran out of time, so I will yield back. Thank you, Madam Chair.
This hearing, Mr. Tenev, I just wanted to go in. I know there's been a lot of questions about the margin call that you got on the morning of the 28th of January. But I'm not sure that we really understand how the margin call changed from $3 billion to $1.5 billion to $600 million. Can you sort of go through how did you negotiate the margin call down? And I mean, and these are very sizable decreases, right? You're 50% and 50% again to something that you could then in turn manage. How did you decrease the margin call? I'm sorry, you're on mute. You're still on mute. I haven't been able to hear a word you said, unfortunately.
How about now?
I can hear you now. Madam Chair, can I have 30 seconds back for that?
Okay. Congressman, I appreciate the question. And first, I want to send my thoughts and prayers to the people of the great state of Texas. I appreciate you mentioning that. I'd like to just refer to my written testimony, which gives the detailed tick-tock of everything that happened. I believe pages 9 to 11.
No, I've read that. I don't. But like, did you go in and say, hey, you need $3 billion, but hey, I won't sell these stocks if you reduce it, and that's how you got to the point where people could only sell the stock, not buy it? Is that what you did?
I believe.
Because that's not in your written testimony. So I'm just trying to get your answer.
I don't believe we had made any decisions on PCOing the stocks between the initial $3 billion request and the subsequent $1.4 billion request. But between the $1.4 billion and the roughly $700 million, there was a discussion between our operational team at Robinhood Securities and the relevant counterparts at NSCC regarding what measures we intend to take to lower the risk of our portfolio.
Okay, so in other words, if you had $3 billion, your customers would have been able to do everything they wanted to do, including purchase more GameStop. Is that correct?
I don't want to speculate on that. You know, if we had infinite capital, certainly. But I think it's also important to note, Congressman, that this was an evolving situation. We hadn't seen it before. We had no idea what Friday would have looked like had we been able to allow customers to buy these securities unrestricted on Thursday. So I think it's difficult to speculate exactly how things would have been different.
But I mean, isn't the reason they said you need $3 billion because your customers wanted to buy GameStop, and then by saying, hey, they can't buy it, they can only sell it, that reduced the capital that you needed? I mean, it seems to me that's what happened, but I'm just trying to get it.
They weren't saying specifically that nobody, I believe, didn't want our customers to buy GameStop. These are regulatory mandated deposit requirements, Congressman, that we had to comply with that were heavily influenced by the concentrated activity in GameStop, AMC, and the other securities.
Well, wouldn't it be fair to say that your firm was undercapitalized to allow your customers to do what it is that you wanted them to be able to do?
I think, Congressman, you know, that in this case, certainly if we had the additional capital, we would have been able to ease restrictions or perhaps with sufficient capital, unrestrict altogether. I think it's important to note lots of other firms did essentially similar things, if not the same thing, in restricting the buying. So this was really more of a systemic problem rather than a uniquely Robinhood problem.
But didn't the fact that you went out, raised more capital so that you can actually answer this problem in the future, doesn't that also belie that you were undercapitalized on the 28th of January?
Again, Congressman, we met all of our regulatory capital requirements and deposit requirements.
Your customers wanted to buy the stock. You wouldn't let them do it because you didn't have the capital to allow them to do it, right?
Yes, we didn't have the deposit requirements.
I think that's really a core problem that I think this committee hearing has shown me is that you were unfortunately undercapitalized to help your customers do what they wanted to do. I yield back.
Am I right side up? I believe I am. Mr. Gill, as was previously noted at this hearing, one of your colleagues at the witness table has as many as 5 people in the room with him. I guess, Mr. Gill, my first question for you is how many people are in the room with you right now? Mr. Gill?
0, Congressman.
Gone? Right. That's what I thought, Mr. Gill. And I just want to note for the entire committee that Mr. Gill is actually appearing before our panel by himself while many others are receiving significant, obviously underestimating the sophistication and the independence of these individual investors. Now, we've heard a lot of reasons for concern today. Some are legitimate, but also some proposed overreactions by members of Congress that could create even more problems. Attention has been given to the positive sides of this story. Others temporarily limiting its investors from trading, which deserves an investigation. What we saw was a movement of individuals investing to try to make money. I don't see what's wrong with that, even if that motivation is fueled by a desire to stick it to a hedge fund they don't like. Mr. Gill, you're the only retail investor involved in this GameStop situation on our panel today. Why, I don't know, but you are. Yet members on the committee have hardly asked you any questions. We've heard from a lot of the companies and funds involved in this event, but we've barely heard from the people that made this happen. Is there anything you would like to add to this hearing that you haven't been able to add yet, given that we're past the 4-hour mark on this hearing?
I appreciate that, Congressman. I do. I don't have anything to add at this time, just that I would be the first to acknowledge that investing in stocks and options is incredibly risky, and it's so important for people to do their own thorough research before investing. But that said, I tend to agree with you that folks should be able to freely express their views on a stock, and they should be able to buy or not buy a stock based on those views that they may have.
Hey, Mr. Gill, on that note, so how would you feel if these brilliant people that are asking you these questions today decided that you should not take the risks that you're making these thoughtful decisions on? What do you think about that?
I would probably ask for an explanation, Congressman, and to try to understand their viewpoint as to why they might think that, and perhaps we'd be able to talk through it.
Right. I appreciate it, Mr. Gill. I think we need to value the right of the individual to make decisions for themselves. And it's fantastic to see so many people getting involved and participating in the greatest financial markets in the world. We should be encouraging individual participation in the market by you and others. And we should want more people, more, not less. We don't need the people from the mountaintop deciding who's capable and who's incapable. We need more people having the opportunity to develop financial literacy, to build their own portfolios, to secure a safe and comfortable retirement, to grow their wealth so they can send their kids to college. And most importantly, in my opinion, we should strive for individuals to have the autonomy to do all that they themselves would want to do without having to rely on others or, God forbid, their government.
I also want to thank Mr. Budd for using his time to mention blockchain technology applications in the post-trade settlement and clearing process. In light of this whole situation, it's important now more than ever that we utilize the technology that we have access to, and we don't have access to technology, and we do, have access to technology that is decentralized and can provide real-time trade settlements. Mr. Lynch and I have a nonpartisan bill that we reintroduce very soon that concerns this. If we should exercise oversight of anything here, it's to ensure that individuals maintain access to our markets, individual investors, and discussions about over and undervalued companies only continue to increase. Unfortunately, average investors were locked out of the markets at a time of extreme volatility, while institutional investors were not. Well, I understand that a lot of what happened during this market frenzy came down to liquidity issues. Individual investors were in a vulnerable position and were at the will of online brokerage. We should be taking this time to discuss how to move forward in a way that promotes market access to all investors, just like it did last month. Congress clearly does not understand what credit is and how you utilize social media and catalyze the market movement. We've significantly underestimated the sophistication of America's retail investors, and we've not been focusing on improving market access.
The gentleman's time has expired.
Madam Chair, I appreciate it.
I do want to follow up with on Mr. Perlmutter's questions, Mr. Gill. I represent the 8th Congressional District, which includes Brockton, Massachusetts, your home. So I figure I more than anyone owe you the opportunity to respond. But you earlier said that that you began your trading in GameStop when it was around $5 a share, with the hope that it might go to 20 or 25. And I want to say I accept your analysis, your initial analysis that GameStop was undervalued, and I think your belief was sincere, and I think it was fact-based. And in your defense, we are talking about GameStop, right? It's a shopping mall retailer. We all know it. It's a well-known commodity. But at some point, the stock really takes off, right? It goes from $5 to $100 to $200 to $300. It gains escape velocity, as they say, and it ends up almost $500 a share. So we're still in the midst of a pandemic, right? And you can land a jumbo jet in the parking lot of the Westgate Mall in Brockton or any major mall in America, right? So no one's going to the malls. Nobody's feeding this company. And so it's up around $400, $500. Is there a role for someone to play here, for you to play, or the SEC or Robinhood to say, okay, this price dislocation has become detached from reality, and a note of caution might be given to other day traders and individuals, retail traders who might get jammed if they get into this trade. From your perspective, I mean, you've got a unique perspective. What do you think is the proper thing that should have happened? At some point, this thing got away from you and went totally into the stratosphere. And I'm just wondering what your thoughts are on how this should have worked.
Thank you, Congressman Lynch. I do know Westgate Mall quite well. I would say that, just to be clear, I had thought that maybe roughly $20 or $25 per share. I had thought that at that time, but investment theses, they evolve over time. As the fundamental events change over time, it's important to update theses accordingly. And I had mentioned that it appeared as though the stock price had got a little bit ahead of itself last month, but there's a lot outstanding. There's a lot that has happened in recent months to suggest that GameStop could indeed turn around its business significantly. And one big element of that is indeed one of the largest investors in GameStop, Brian Cohen, and he has brought in some colleagues that could help him turn around this company. And fair value could indeed, sorry.
Yeah. Okay, I'm going to reclaim my time.
With that, we'll go to Ms. Ocasio-Cortez for 5 minutes.
Thank you so much, Madam Chairwoman.
Mr. Tenev, Robinhood has engaged in a track record of outages, design failures, and most recently, what appears to be a failure to properly account for your own internal risk. You've previously tried to blame clearinghouses for your need and scrambled to raise some $3.4 billion in a matter of days, but you've also, blamed a lack of industry-wide real-time settlement, or rather a lack of that settlement of trades. But Robinhood's requirements for margin have long been far more lax than other brokers for a long time. With, in December, just a couple months ago, you bragged about having some of the most competitive rates in the industry. And this is evidenced by your recent decision to raise those requirements. When Robinhood prohibited its customers from purchasing additional shares of several stocks, other brokerages merely adjusted the margin requirements on these stocks. So, Mr. Tenev, given Robinhood's track record, isn't it possible that the issue is not clearinghouses, but the fact that you simply didn't manage your own book, or failed to appropriately manage your own margin rules, or failed to manage your own internal risks?
Thank you for this question, Congresswoman. Let me address the margin point, because I think this is an important one that has been under discussed. So in December, when we lowered our margin rates to 2.5%, one of the details that I think was missed is that most other brokerages have tiered margin rates, where the wealthier customers pay much lower margin rates than lower net worth customers. So you'll have someone that has $10,000 paying 9 to 10% for margin, whereas someone with $1 million pays 2%. So our approach was give everyone a uniform rate so that wealthier customers are not advantaged with lower rates than lower income customers. And I think that's a unique approach in our industry and is representative.
Thank you. I have to apologize. I have to reclaim my time for questioning. As many of my colleagues have also pointed out, Robinhood generates much of its revenue from the payment for order flow arrangements with market makers like Citadel, as well as Two Sigma and Virtue. And in 2016, the SEC highlighted ways that the payment for order flow created a, quote, potential conflict of interest with a broker's duty of best execution. And then one of the ideas that the commission floated in 2016 for addressing these conflicts of interest was to require that brokers pass on the proceeds of a payment for order flow. Now, earlier, one of my colleagues, Representative San Nicolas, said that Robinhood owes its customers a lot more than an apology. And I happen to agree with him. I believe that the decisions made by you and this company have harmed your customers. Mr. Tenev, would you be willing to commit today to voluntarily pass on the proceeds of the payment for order flow to Robinhood customers?
Congresswoman, I appreciate that question. When the statement you referred to was made, I believe 2015 or 2016, it was before Robinhood forced the entire industry to drop commissions and replicate our business model, which made payment.
So is that I should take that as a no, you're not willing to pass on the proceeds of payment for order flow to your customers?
When the other brokers dropped.
I'm just talking about today, right now.
Payment for order flow, Congresswoman, allows for commission-free trading. In the context of trading commissions, it's a much larger source of revenue in the past than payment.
Mr. Tenev, I apologize, and I don't want to be rude. I just have limited time. But if removing the revenues that you make from a payment for order flow would cause the removal of free commissions, doesn't that mean that trading on Robinhood isn't actually free to begin with? Because you're just hiding the cost in terms of potentially poor execution or the cost of lost rebates to your customers.
So certainly, Congresswoman, Robinhood is a for-profit business and needs to generate some revenue to pay for the costs of running this business. People were initially skeptical that the model, even with payment for order flow, would work when you remove commissions. And I think we've proven that otherwise by making this the standard model by which brokerages operate now.
I see. Okay, Mr. Tenev, I have to move on very quickly. I have a timeline question here for Mr. Plotkin. I see that earlier your testimony today was that, hello? Earlier, your testimony today was that Melvin Capital had not engaged in,
I see it, Illinois.
oh, sorry. Madam Chairwoman, I'm sorry. I think you're not muted. Sorry about that. Mr. Plotkin, earlier today, you mentioned that Melvin Capital had not engaged in a naked short of GameStop, and Melvin closed out its position on GME on the 20th, correct?
I'm sorry. The gentle lady's time has expired.